Okay, let's take a quick break, and it's time to get into your pro picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, in Bob's Pro Picks, he has brought 3 funds that invest in different sectors. So you're bullish on those sectors, but it also speaks to, Bob, what you've been mentioning about selecting the right managers. So these managers are Sprott, Dynamic, and Ninepoint. And we'll go through each of them, but just at a high level, how do you go about, stock selection is one thing. What's the secret sauce to money manager selection?
Sure. I did a book many years ago called Stock Market Superstars, and it was interviews with 12 of Canada's best money managers. Some of them are resource people, some weren't. Some were value managers, some were growth managers, and they all had different styles. And I tried to put my finger on the one or two things that made them way more successful than other money managers. So I think that's important because it's never anything they say. If you line up 10 money managers, they'll all say the same thing. You say, well, why are 2 of them great and the other 8 are mediocre? Well, there's something, the way they look at the world, past experiences, coming from poverty, understanding things that other people don't look at. And I think that's important. So we have a history of doing that. And I think in the as I mentioned, 80% of money managers aren't necessarily worth investing in, right? Because they're all, and it's not their fault. The consultants have told them to crowd around the benchmark, crowd around the index. And so, because if you stray from the index and you're wrong, you get fired. So they stray around the index, and then there's management fees, and you underperform the index. But there's 20% which have provided a tremendous amount of alpha and a tremendous amount of opportunity. And these are the people who look at the world differently. They aren't necessarily one style of money manager, but they stick to their style. They don't deviate, and the results show. And I think that's so important in the commodity space because, again, we've talked about it's a pretty tough space to invest in, right? It's not like you can buy and hold Apple for 20 years, right? Generally speaking, you've got to understand the cycle, and you've got to understand when to get out of it and when things change for a company.
So with that in mind, let's go to your first one. You've mentioned that you're bullish on silver, but we didn't get into it. And the way you express that is in the Sprott Silver Miners and Physical Silver ETF, which anyone can buy. The ticker is SLVR on the NASDAQ, and it's relatively new. It's only been around in 2025. It's done very well. Talk to me about both that combination of money manager plus your bullish view on silver.
Sure. Silver is kind of half a precious metal and half an industrial metal. So we're positive on the fact that on the precious metal side of it, obviously because of the U.S. debt load, et cetera. But also silver has had 4 years of its supply-demand deficit, right? So the supply hasn't increased, the demand is going up. And we saw that with palladium a few years ago, and then palladium prices absolutely skyrocketed, right? They went up tremendously because it catches up sooner or later. The other thing is the gold to silver ratio, right? Now, there's a lot of people that say it doesn't really matter, but what it tells you is kind of the psychology of the market and where the flows are going. So the gold to silver ratio recently was at 100 for a couple months. It's only been at 100. In other words, the price of gold, if gold's 3,000 and silver's 30, and that's 100, it's only been at those levels 3 times in the last 40 years, 50 years. And those are crisis times, right? It was during COVID, times like that. So we just went over 100 again. So that tells you that the relationship, when it narrows back to maybe 30 or 40 at the end of a bull market, silver has a lot more upside. Gold's had a huge run. People overlooked silver. Silver and gold are related to each other. They're both precious metals. We haven't seen a lot of investor demand, but silver is the best conductor of electricity, right? So you need tremendous amount of silver for solar panels. There's a big debate right now about solid state batteries that are coming out and how much silver is going to be required for those for electric vehicles. So I think on the demand side, we see silver doing very well from an industrial perspective, but also, you get substitution in commodities. So in other words, if gold becomes very, very expensive, people tend to say, well, how do I participate in the precious metal space? I'm going to invest in silver. And interesting enough, I was talking to somebody the other day, and in India, I think they have 5 million weddings a year, and they always give gold, right? That's the big deal that they give, which is a big source of demand, actually. I heard that recently there's not as much gold being given at weddings in India because the price has gone up. And they're giving platinum and they're giving silver.
Interesting.
And I think that's really important.
And this ETF has done really well. Silver's up 20% so far in 2025, and this ETF is up 43%. So already they're outperforming. Your second pick is a little bit more of a mixed bag in terms of the commodities that it holds. This is the Dynamic Active Mining Opportunities ETF, ticker DXMO, and that trades right on the TSX. Looking at their holdings, as I said, it's a grab bag of sort of gold stocks, copper stocks, uranium, a little bit more overweight, the gold stocks, and managed by Robert Cohen, who, of course, and Emily Griffiths, who are well known sort of in the commodity space. Is this more a play on the manager than what they're investing in?
Well, Rob has produced a tremendous amount of alpha. I mean, it's been since 2011 when it peaked. I mean, the gold sector has generally been a pretty horrible sector. And when you look at GDXJ, which is kind of the comparable to him, GDXJ peaked at 160 in 2011 and it's 70 today. So that shows you the benchmark. Meanwhile, Rob has averaged almost 20% a year since that time, which is incredible alpha. In a horrible sector, to have that sort of alpha has been absolutely incredible. So that was the precious metal side. And I've known Rob for many years, and him and I had a chat, a few years ago. And I said, Rob, I mean, you're such a great stock picker on the precious metal side. Why don't you do something where you can choose copper stocks, uranium stocks, or whatever the case is, because you're such a great stock picker. And that's why, not because of me, but this product came out. And that's why I'm so positive on it, because gold is cyclical. You're going to have times where it does very well, very poorly. But, Rob's a bull on uranium, and you see uranium stocks in there. You see the best copper stocks, the best uranium stocks. He has a knack for picking stocks that actually become mines. And one of the reasons is because he's a metallurgist, and he can look at the metal and say, is this going to become a mine or not? And I think that's his kind of secret sauce that a lot of other managers don't have. And it's small. Right, you need something that's very small in the mining sector. Once you get up to billions of dollars, you can't make your alpha that you used to make. So that's what I love about the product here, is that it's diversified in mining. There's going to be lots of places that he's going to find opportunity as the cycle progresses. But you have one of the best stock pickers in the sector too, in a really small portfolio.
And just for reference, that GDXJ that you're referencing is the benchmark. That's kind of the junior mining index. And so to be able to outperform that's no small feat, because that index can be a bit of a heartbreaker. Okay, your last pick is of a fund that many people will know the money manager of, the Ninepoint Energy Fund. Eric Nuttall is the manager. He's been on this show twice, and he's got something of a cult following. And to your point about liking gas over oil equities, that's something that Nuttall spoke about the last time he was on the podcast in April. Right. And he's been heavier in the natural gas side. He has a relatively high turnover. But I think, in the oil and gas space, it's kind of like the mining space. You really have to know somebody that knows the small cap names. Can go large cap, can go small cap, can go mid cap, can go US, can go Canada. And I think that's important to give a manager all the tools that necessary. Because if you say, you're going to be a manager that's going to be a large cap Canadian oil and gas manager, well, they're not going to be able to perform as well as being able to dig down and look at relative valuations, et cetera. So Eric's proved himself over time to do a very good job. It's lumpy. It's always lumpy, the returns.
But if you take a manager like him and say, hey, wow, things haven't worked out too well for the last couple of years, for example. I mean, he's done well, but if you can find periods of underperformance with a great manager like that, it's time to invest because it's going to come back. These stealth bull markets, and again, what I mean by that is people don't realize that we're in a bull market, but we are. When we get into a bull market and everybody knows we're in a bull market for something, the chances of gains are very low at that time. That's why I'm positive on right now. I don't think anybody would argue we're in a really strong bull market right now for oil and gas. That's why I like it right now.
All right. And the fund has actually done pretty well in 2025, outperforming oil and the TSX oil producers. Bob, I think you convinced me to get interested in commodities more than anybody else on the show. So I appreciate your time. Thank you so much for joining me.